This video is about the banking crisis versus the Florida housing market. If you're new to the channel, welcome aboard. If you're a returning viewer, I appreciate your participation in our journey. Today, we're going to get right into it because the Silicon Valley bank collapse has triggered contagion fears. I remember exactly what it felt like back during the great financial crisis. And I remember the panic that people felt as they watched their stocks get decimated. Because at that time, I was a stockbroker. I was handling people's stock accounts. I was managing their money. And anybody that was long stock was certainly not performing. And fortunately, there were plenty of solutions in order to capitalize on market and sector weakness. And so we were able to pivot. But I was only able to do that if the client I was speaking to was not panicked. Banks and institutions were failing left and right. People did not believe that their money was safe in the bank. They did not trust the system. And the system almost failed. And the government and Warren Buffett stepped in and capitalized the banking system. And without getting into the politics of whether that was right or wrong, it's what happened because the consumer had no faith or confidence in the banking system. And if the consumer does not trust the system will fail. And if everyone pulls all of their money out of the bank at the same time, if there's a massive run on the banks and people are stuffing their money into the mattress, well, then the system and the economy fail. And I've read your comments. A lot of you do not have faith or confidence in the government. And neither do I. But at the end of the day, I am an American and I'll always bet on America. And markets will go up and markets will go down. Home prices will go up, home prices will go down. Stock markets will go up, stock markets will go down. But cash will seek its highest value. And unless you believe that the entire United States is going to collapse, which I don't, long term, the trend is good. The trend is your friend and the future looks bright. But in the short term, there's going to be a heck of a lot of pain. And that's exactly what we're going to talk about today in the face of this Silicon Valley bank collapse. Because surely that couldn't possibly impact my local housing market or my hyperlocal market or me personally. And yet it did. And if you've been watching for a while, you know that I share my real-time stories. As a boots-on-the-ground operator of a high-performance real estate team, I am dedicated to sharing the truth about what's happening in my market. And in the recent past, we've been able to negotiate incredible deals relative to original list price for our buyers. And the biggest home run that I recently had was with a relocation buyer who happened to live in California. We found his dream home, his dream lifestyle, and we negotiated a 40% reduction from original list price. He walked into a metric shit ton of instant equity. And yes, I know that equity isn't real until it's realized and that markets can go up and down, but we scored him the deal of a lifetime. But that deal of a lifetime closed on Friday. And that deal of a lifetime is not closed until he wires the money from his bank into the new bank. And by the time I got his phone call, I had already done a video about the Silicon Valley bank collapsing and the risk of that contagion fear destroying the housing market. But the entire premise of that video was based on things that could happen in the future. I certainly didn't suspect that we were going to be in trouble now. But when I spoke to him, it was very clear that he was panicked. Because although he was not a client of Silicon Valley Bank, but one of the regional banks where he does do business was experiencing a bank run. And the wire he had done earlier in the day had not registered yet. He was terrified that he was at risk of losing his win, losing his dream home, losing the deal of a lifetime because his wire had not gone out yet and his regional bank was at risk. There was a run. Money was exiting faster than it was entering because the rest of the deposit holders were scared shitless. But when people are panicked, they don't make rational decisions. They run. And they run with their money. So there was a brief period of time on Friday where I was also terrified that my client isn't going to get what he wants. And even worse than that, he was afraid that his money in general was not safe, which instantly brought me back to how it felt during the great financial crisis. And thank God this story has a happy ending, because the truth is, wires do take some time to process and to be registered in the respective accounts. Because the truth is, a lot of these banking systems, they don't work very fast. Or at least their accounting systems don't necessarily work very fast. And while I understand the panic, I also knew that he was going to be fine. And I told him as much. But until the wire is in the account, the wire's not in the account. And the wire hit on Friday. So crisis averted. Which brings me to another story which happened today. Someone just like you found me on YouTube and hired me to go show them new construction in Lotus Palm. And the Boca Raton housing market is going to trade very differently than any other market. It's going to trade very differently than whatever market you're in. Every market trades differently, which is why it is critical to work with a professional that understands exactly what the housing market dynamics are wherever it is you're thinking about buying or selling. Nonetheless, we went to the West Boca Lotus Palm Sales Center to tour some model homes. So a special shout out to Meredith and her son, because they couldn't have been any nicer. But one of the funny things that they both mentioned to me was there doesn't seem to be any recession impacting this particular market, because the sales center and the sales center parking lot was maxed out to capacity. And this is 4 o'clock on a Sunday afternoon, right after a major banking failure. While mortgage interest rates and inflation and unemployment and whatever the next inflation number that comes out next week is going to be, despite all of that, the demand for new construction in Boca Raton is through the roof, which gives me the opportunity to talk about Silicon Valley Bank failure and Silvergate. Because crypto-focused Silvergate announced its plans to liquidate this week and is suffering from similar pain to Silicon Valley Bank, which has more to do with interest rates rising than the whim of digital assets. Because banks do not get paid to sit in cash. Banks sitting in a cash position is basically the opposite of what banks do. For a bank to sit in cash and do nothing with that cash is the absolute opposite of their business model. So when they're going to play it safe, they're going to do it by playing the yield curve. They're going to do it by investing in treasuries. But if they make the wrong bet on the wrong treasuries, well, then they're at risk. And that's exactly what happened here. Silvergate invested customer deposits in long-term bonds in the face of a Fed tightening cycle. With interest rates rising, the bonds lost value. And as customers lost confidence in continuing operating, the bank had to sell those bonds and realize those losses in order to generate liquidity, which is exactly what happened with Silicon Valley Bank, who found themselves at a deficit and tried to raise more than $2 billion in capital to offset the losses in bond sales. And it was a classic bank run combined with an asset liability mismatch. Depositors lost confidence, and SVB had to sell longer dated fixed income securities at a massive loss in order to match withdrawals. And it's financial institutions that rely predominantly on deposits that are under a lot of pressure. Because when depositors leave, forces liquidations. It forces realized losses. And if the balance sheet goes negative, well, poof, we're done. And while there seems to be a reasonable explanation as to how this is an isolated event, I suspect there are lots of banks out there that are on the razor edge, that are on the precipice of having to realize some massive losses. Specifically, any bank that has massive exposure to auto loans, because I know these repossessed vehicles have not been sold. There is a metric shit ton of unrealized losses in major institutional balance sheets, which have been yet to be realized. And when they are, a massive bank run, unlike anything we've ever seen before. And if that happens, the housing market is going to get it right on the chin. And so is every other market too. Now, I hope you found this content valuable, and if you did, please subscribe to the channel, give it a thumbs up, share it with a friend, and check out my next video because I suspect you will love it a lot. And until next time,